Delta raising its guidance. Phil LeBeau joins us now with an exclusive interview. Hey, Phil.
Hey, Joe. Ed Bastian, CEO of Delta, joining us before your Investor Day. Joe just set us up by saying you've raised your guidance for Q2 on both EPS as well as revenue. Give us some perspective on why this summer is even stronger than you expected just a couple of months ago.
Well, first of all, our people are doing a great job. And the demand, as you know, as anyone that's traveling knows, is off the chains. And it doesn't matter whether it's in the U.S., whether it's in Europe, whether it's in Asia. People are wanting to travel, and they're prioritizing travel. And as a result, the demand that we're seeing today is even stronger, and the value is even greater than we're seeing. We're raising not only the full year, we're raising the second quarter. I think the second quarter is going to be our highest Q2 earnings in our history, coming just 3 years after the start of the pandemic, which is pretty incredible. And the other data point that we'll be sharing today is that we're putting a new marker out there to generate $10 billion of free cash between now and 25 as a result of the continued strength, because we think we're in a multi-year recovery.
You think this continues for some period of time?
There's no signs of any let up, and I'll give you a couple of data points. In our industry, 75% of the revenues, we all talk about the consumer and the health of the consumer and wondering about cracks in the consumer, and we get that. 75% of our revenues come from consumers that are in the top 40% of earnings. Households making $100,000 or more make up 75% of our revenue base. As an industry, at Delta, arguably, it's even higher than that. The wealth that cohort has accumulated just since 2019 is over $25 trillion. They have the wealth. And we talk about excess savings in terms of incremental cash savings. That number is still well over $1 trillion for that cohort. So that's very strong. The second thing I want to mention real quickly is we talked about the shift between goods and services starting to return. We're still in the middle innings. I'm going to show some charts about that. We're still in the middle innings of this shift. So I think this is going to take several years before it eventually starts to normalize.
Which then raises the question, your stock is still down 28% from its pre-pandemic high. Yes, you're at a 52-week high right now. When does Wall Street look at Delta, look at the airline sector, and give you the same multiple and credit that they did pre-pandemic?
Well, it's going to take some time. We went through a pandemic. A lot of people lost a lot of money because of the pandemic, and there's investors that are going to want to be confident that the all clear sign is given. And you saw the stocks starting to move over the last month. I think we're up 30% just in the last month alone. I think it's going to take some time. I'll give you a reference point. You know, we've been through this before. You talk about the pre-pandemic. In 2009, our stock was $6 a share in 2009. We got to $60 a share in 2019, right before the pandemic hit, a tenfold increase. So we've done it before. We're going to do it even better this time because of the strength of the balance sheet that we're focused on, the quality of the brand, the investments we're making digital. That's all going to make sure that we have a more durable outcome for the future.
Which is a big part of what you're going to be talking with analysts today about, which is 2025, 26 beyond for Delta. You see this as a different entity, not just as an airline. Paint a picture of what you see Delta looking like, let's say 4 years from now.
Well, first of all, the brand is doing amazingly well. We've talked about being a brand that's elevating above. We're not a transportation company per se. Transportation is what we do, but experience and brand is what we deliver. And that's why people choose Delta. We are one of the top brands in the country. And people are starting to see that. You're seeing that in our Net Promoter Scores. You're seeing that in the premium revenue base we have. You see it in the brands that are seeking us in terms of the affiliations that we're creating. That brand is going to continue to lift. The next step in the journey is the continued investment in digital, transforming everything we do. And I know everyone's talking about AI, and this is not an AI pitch. This is about our ability to take technology, and AI will be a piece of it, but it's not going to be only AI. It's going to enable us to build better connectivity with our customers in terms of personalization. You've seen what we're doing with Wi-Fi. We're just about through. We'll be done by the end of next year through our journey to the cloud with AWS. It'll make us a lot more agile, a lot more durable and flexible as well. It's going to give our own employees the ability to get better decisions made in terms of how they run the business reliably and customers better information about us. We are a massive data organization when you think about carrying 200 million people at scale, and technology is going to continue to transform, and it'll be durable in terms of what it will create.
That vision sounds great. Let me give you a counterpoint to that in terms of not just Delta, but the industry. Congestion issues, whether it's New York, whether it's Chicago. You look at what's going on at Reagan National, the perimeter rule. Are you concerned that the investments are not being made as they should be around the country in terms of preparing the industry for the growth that's expected later this decade?
I think infrastructure is something we've talked about for years, about being underinvested in and not having the leadership.
How do you change
to create
that?
Listen, I'm not in the political office. You know, we've given our point of view. I think one thing that we have to do is make sure that there's sufficient funds allocated on a long-term basis that are not determined by political types. They're determined by actual people that understand the FAA and the technology and the infrastructure investments that's required. Unfortunately, it gets too much into a political debate, and then we wind up compromising our ability to secure our future in that regard. But regardless of that, Phil, when I talk about digital, I'll give you another data point. We have today, not even talking about growth, we have a $40 billion installed capital base, you know, our planes, our airports, everything that we do. If digital can't deliver at least a 3 to 5% better return back to us in terms of more efficiency, which is going to help on the infrastructure side, and is going to help on the loyalty side, you know, that's billions of dollars a year of return without actually having to go through the traditional growth measures of putting more planes in the sky.